There is speculation that mortgage rates could fall as low as 6.2% by the end of this year. This is relevant to you if you are wanting to buy a house in South Jersey but thinking you are going to wait to see if rates drop, or let's talk about why that strategy might actually cost you thousands of dollars. So 6.8% is the kind of mortgage rate people are getting right about now. Let's say we are going to buy a $400,000 home at that interest rate. We're going to put down a 10% down payment, typical loan term of 30 years, and let's say this home is in 08108. So let's update that and we can see that we have a potential monthly payment which includes the principal and interest, property taxes and insurance of $2,676. This is just a random bank rate mortgage calculator, so obviously you need to speak to an actual loan officer to get the numbers that will be accurate to your specific scenario and financial information. But using a calculator like this, it gives us an idea of how much we would save if our mortgage interest rate was 6.2%. So you see the monthly amount has dropped down to $2,534 a month. But let's look at what happens in the market when mortgage rates drop. So this is a Freddie Mac mortgage market survey, and it shows the averages of the 30-year fixed, and we can see all throughout 2021 there was lots of 2s, there was lots of 3s. Do you remember what was going on in the market in South Jersey at that time? Weren't there like 50 offers on homes? You couldn't even get through the door of an open house because it was so busy. It was really hard for the average person to get an offer accepted, i.e. the kind of person who doesn't have all cash investor type offers, the kind of person who can't waive all inspections because this is their only asset and it's too much of a gamble. So we can see the low rates of 2021, but we can also see that rates peaked their highest in Q4 of 2023. And since we were looking at 08108, which is Collingswood Haddon Township, we can see that in that Q4 2023, the average list price for homes was $504,000. And naturally, there is usually a few months from the point of listing a home to actually closing on a home. So I'm going to jump forward to Q1 of 2024, where we can get some data on those homes that were sold, where we can see the average sold price is just $418,000. We can also see that there were 44 homes basically sold in Q4 2023 and only 28 sold in the first quarter of 2024. We normally see at least 10% year-over-year home price appreciation in this area, but when the average sold price in Q1 2024 was $418 and a whole year prior was $455,000, we actually depreciated 8%. All because rates went above 7% and so there was less demand in the market. Now in Q1 we actually saw rates go down to about 6.6 to 6.8% on average, which is when we saw the average list price be $412,000. So then let's jump to the second quarter of 2024 when a lot of those homes actually closed, and we now see the average sold price has gone back up to $462,000. So all of that to say that mortgage rates really do have an impact on what homes sell for, because for many home buyers it is very black and white. If rates are high, they won't buy, they back off from the market, and if the rates drop, they get back into the market looking for homes. So naturally, when this happens en masse, home prices in a particular area get pushed up because it's a simple case of supply and demand. So jumping back to our mortgage calculator, now we saw that home sold prices can increase dramatically when rates drop just a few percentage points. Like, it's not unreasonable for a once $400,000 home to sell for, say, $450,000 once you have 20 buyers interested in that one home and emotions are high and people are desperate and are probably offering more than they thought they would. So to really put this in perspective, a $400,000 home that you buy at a 6.8% interest rate, you can expect to pay around $2,700 a month, depending on some variables. But let's say that you wait, right, because you see that rates are going to drop, but they actually do drop, and so, you know, half a year later, a year later, you manage to get a 6.2% interest rate. However, now this $400,000 home, because they've got so many people wanting to buy all the homes on the market, it's now gonna sell for $450,000. Let's keep our 10% down payment, 6.2% interest rate, update, it's now $2,843 a month. So let's look at that side by side. So at the 6.8 interest rate, this is your monthly payment, 2.6. The 6.2, because the home has cost more money, we're now looking at a higher monthly payment. So over the lifetime of the loan, you are costing yourself thousands of dollars. And don't forget that even if you buy a home at this rate, you can refinance it down the road if rates do drop to a point that you want to refinance to. So I'm not giving you advice to buy, I am just showing you the math that if you were to wait for rates to drop, especially in our South Jersey market where we're lacking in inventory, you could be costing yourself money.